like this morning we will be upgrading Singapore's growth forecast as well.
Okay. Now, just to kind of come back to these tariffs, Hagbin, now Trump really hasn't cut much slack when it
Mm.
comes to ASEAN. So, what are your thoughts on this? What do you think his motivations are? And also, as a follow-on, does this mean this whole China plus one supply chain shifts that have been propelling this region, particularly in the past few years, is that over?
Mm. So on the tariffs, I think the reciprocal tariffs are coming higher than expected. I mean, it's hard to read Trump's mind, but I presume he could be emboldened by the fact that markets have done so well, the economy is doing pretty well, they're collecting a lot more fiscal revenue on the tariff side, and that may help to justify some of the tax cuts that's proposing in his beautiful budget. So and inflation as well has turned up much lower than expected, and jobs growth has been decent in the US. So I think it's probably empowered him to raise those tariff rates. Um,
Mm.
so Malaysia's tariff rates came in slightly higher than the earlier proposal. Even the Philippines was slightly higher. Thailand, Indonesia saw no change. The only ones that were cut fairly substantially was Vietnam, is down to 20 from 46, and Cambodia, down to 36 from 49. It's hard to rationalize why, certain countries got a lot more and certain countries got a lot less, especially since some of the trade negotiators in Malaysia, Thailand were all guiding for substantial lower rates. Still, I mean, the deadline has been pushed to 1st August. Malaysia, Indonesia, and Thailand are signaling that they could get lower tariffs. We hope so, but we'll see. But I think assuming that they'll get 10% is a bit too optimistic, and maybe at best 20 to 25%. It looks. There's also worry that the baseline tariff rate will be raised. Singapore, presumably in the first round got 10% baseline. Up to now, Singapore has not received any letter on what that final rate could be. But there could be there are news out there that the new baseline could be 15 to 20%, which could impact Singapore. But for the most part, I think Singapore stands relatively low on the whole scale of reciprocal tariffs, even if the final baseline is raised.
Got it.
And then the
And
supply chain,
mm,
the second question. I think that
yeah.
we calculate the effective tariff rates because the effective tariffs are could be different across countries depending on whether you're exempted. Bear in mind that electronics pharma are still exempted, and also whether you export a lot more of those tariffs that had sector tariffs like cars and steel are subjected to 25% tariffs. And based on that, Singapore is pretty low at 5.1, and then we find that most countries are all lower than China. China, despite the deal, the effective tariff rate is still closer to 37%, and only Cambodia is above that rate. So the gap between China and ASEAN has actually widened since the start of the year, widened to about 16 percentage points from the 9 percentage points. So I think that still makes a case for supply chains to move to ASEAN.
Okay, got it. Now, how are you thinking about growth for the second half? Are there any countries that you're more bullish on, and where are you more cautious on?
So I think within our range of current forecasts, we're probably most bullish for Singapore and Vietnam. We see upside surprises, in part because these two countries also have the most fiscal room for
Mm.
stimulus. So I think that will come into play. And also the exports have been holding up fairly well. So some of the fiscal constraints have been a bit tighter for the other countries. So I think those two would stand out in terms of markets and in terms of economy.
Okay. And before I let you go, can I ask what your take on Singapore's second quarter GDP readings were that just came out a couple of hours ago?
So I think we had some full bullish estimates. We were looking at 3.8%. The market was looking at 3.5%. The actual second quarter came in at 4.3%. So
Mm.
markedly better, and actually the improvement was kind of across the board. For manufacturing accelerated from the first quarter, right? Despite all these tariff shocks. So the exemptions could have been one. The delay, the 90-day reprieve could have helped as well. And then construction growth is still holding up pretty well, near 5%. Services growth also accelerated. And within those three components within services, one is the wholesale retail trade that also strengthened, plus the financial services component also strengthened. Plus even we were a bit more worried about the accommodation and food services, where retail trade has been fairly weak. But that also improved a bit. So looks pretty, looks like a very strong figure. and we're expecting the government to adjust their growth forecast, which is, was cut to 0 to 2. We had ours at 2.4, but I think we're expecting government to raise their forecast to 2 to 3% when the final figures are released in August. For ourselves, we're raising our forecast to 3.2% for the full year, from the 2.4. So our 3.2% forecast, of course, well ahead of what the government's current forecast is. But it looks like the momentum is there, and then we are expecting that already factors in a trade slowdown in the second half, but not a contraction. We think that for the most part, some of the momentum in the trade figures looks fairly encouraging.
Got it. Thanks, Agbin. With
Thanks,
that,
Ellen.
let's turn our attention to data centers and switch over to Hussaini. Now, this has been a very hot topic for Southeast Asia for a long time, particularly for Malaysia and Thailand, which has been getting massive investments there. Now, Hussaini, let me ask you, you're sounding a word of caution because there is news that the Trump administration is drafting rules to restrict exports of advanced AI chips to Malaysia and Thailand in particular. So, what do we know so far?
Sure. Thanks, Dylan. Thanks for having me. Now, details are limited, obviously, and the key source of this information is Bloomberg. So, what we know based on the news flow is that US government is drafting a rule to restrict export of advanced AI chips to Malaysia and Thailand. This is mainly to restrict its re-exports to China. So what this countries or what this Thailand and Malaysia have seen is that these are used as a conduit to re-export chips to China, and that's why they are trying to put a curb or export restriction. There is also a concern that the data centers based in these two countries are also mainly used by Chinese companies to rent GPUs. Okay, so in order to restrict that, they have brought in this restriction. Now, we are of the view that ASEAN is very critical market, given it's an third largest population bloc. It has a very fast growing digital adoption levels. So in our view, if US technology is restricted, which essentially means leaving a major region out from development of US standards, I don't think that US can afford that. To leave ASEAN from the development of US standards. So we have to see how it pans out. But given this news flow, it creates some uncertainty for the development of ASEAN data center.
Yeah, so I mean, yes, for the future, definitely it's going to have an impact on US standards and all that. But right now, given that there's been a lot of investments that have happened in this space, what do you think is going to happen to that?
Yeah, that's a major concern because see, 70% or more than 70% of the data center development in ASEAN is happening either in Malaysia or in Thailand. Okay, so assuming an export restriction comes into place, we see it will have a major impact on the ASEAN data center development. Malaysia and Thailand are the markets which have ample power, land, and other related infrastructure needed for data center development. In these two markets, particularly, have more favorable government policies to encourage data center development. So if these two markets comes into restriction, it will have a major impact. Now, based on our estimates, the under construction pipeline in Malaysia is almost 3 to 4 gigawatt, and that in Thailand is around 1 gigawatt. Okay, now a 1 gigawatt data center development entails an investments of more than $10 billion. So you can estimate that the kind of impact it will have on the infrastructure development in these two markets. Now,
Got it.
Now outside of these two markets, we don't see that ASEAN has big potential. Singapore has its own constraint, land, power, and water constraint for data center development. Philippines and Indonesia are mostly seen as domestic markets from the data center point of view, not the export markets. And Philippines also has high power costs as well. So essentially, it will have a major impact in my view.
Okay, and which companies do you think are going to have the first order impact from all this?
I don't think that means essentially we don't have listed companies, listed data center companies to face a first order impact, but definitely there will be a second order impact. And means the companies which are in the supply chain of data center, like property development or companies in EPC or in power side, those are the companies which will get impacted. We flag companies like Gamuda, Sunway Construction, IJM, and TNB in Malaysia, as well as WHA and Amata to face near-term pressure due to this demand uncertainty.
Okay, thanks, Hosseini, for that. Now, let's go to Vietnam and speak with me, Nguyen, who covers Masan Group. Now, this is a $4 billion US market cap company. Now, Mi, welcome to the show. Now, before we begin, can you tell us a little bit more background on Masan Group? What do they do?
Okay, thank you, Thilan. Good afternoon, everyone. So, about Masan Group, it's the leading consumer-focused conglomerate in Vietnam. So, Masan operates a leading branded consumer goods, fresh food, and modern grocery retail network in Vietnam. Specifically, Masan owns Wincommerce, the largest grocery store chain in Vietnam, with about 4,000 stores nationwide. And it also holds a strong portfolio of top consumer brands in Vietnam, including FMCG from Masan Consumer and branded meat from Masan Midlife, vegetable and fresh food from and fruit from Win Eco, and another beverage retail named Phúc Long. So beside the direct subsidiary, Masan also owns 20% in Techcombank, the largest private sector bank in Vietnam, with strong customer base on mass affluent segment. So with a vertically integrated ecosystem that serves the daily need of millions of Vietnamese, so Masan is strategically positioned to benefit from Vietnam's rising income, expanding middle class, and the shift toward modern trade, high quality consumption. So that will support for the long-term organic growth. I mean, from the recent demand and the premiumization trend, and the other structural tailwind from the shifting trend to modern trade. So given the huge opportunity for modern grocery in Vietnam, so you know the grocery landscape in Vietnam is very fragmented and dominated by the traditional channel. So we see the potential growth for Masan in the long term.
Got it. Now you got a buy rating on this company. Why are you so positive? What's driving your positive outlook?
Okay. So for Masan, I believe that the clear consumer-centric strategy and its target to deleveraging will be the key driver for sustainable growth in the next 5 years. So Masan is evolving into a more consumer-focused conglomerate with emphasize on the core drivers such as branded FMCG, modern retail, and fresh food. So additionally, it also has clear deleverage targets. So the company recent restructuring efforts such as streamlining from non-core segment and integrated its consumer retail ecosystem have sharpened the company strategic focus and improved its operating efficiency. So supported by the strong cash generation from consumer-facing businesses, Masan also reduced its leverage significantly. So this transition, combined with the clearer earning visibility across the integrated platform, underpin a stronger and more predictable growth outlook over the medium to long term for Masan in our view. So we forecast FY 24-28 EBIT CAGR of 16.5%, driven by the robust contribution from consumer goods, sustained growth in modern grocery retail, and efficiency gain in the branded meat segment. So combining with the very strong earning from its Techcombank, its JV Techcombank, and reducing interest rate expense, we project FY 24-28 net and PATMI CAGR of around 30%.
Okay, very strong growth coming from the company. But what else is going to drive the stock price higher? Anything else that you think will catalyze the stock to move higher?
So currently, we see that Masan valuation represents a steep discount to the total value of its subsidiary. So despite our conservative valuation for each subsidiary and additional collaborative discount of around 25%, our SOTP-based target price still provide around 35% upside potential for Masan. So we see multiple re-rating catalysts for Masan. The first one is we believe that Masan will be one of the key beneficiaries of foreign inflow if Vietnam market is upgraded to emerging market status by FTSE in this year and by MSCI in the next couple of years. So persistent foreign silence since 2020 has been a major headwind for Masan's share price. So we see the potential market upgrade will support to reverse the foreign inflow into Vietnam market and Masan as well. So we believe that will be the major re-rating catalyst for Masan in the time horizon of the next 12 months. So beside the market upgrade catalyst, we also see that strong fundamental improvement that lead to robust earning turnaround will be another re-rating catalyst for Masan. And additionally, we also see some potential re-rating valuation for Masan Group. The first one is its subsidiary, Masan Consumer, will have planned to move to list in the main board in late of this year, and the company is trading at discount compared to regional peer because it has been listed in the upcoming market and limited the opportunity for foreign investor to invest. So we believe that when Masan Consumer move to the main board and have the opportunity to re-rate, it will support to re-rate Masan Group as well. Yeah.
Thank you. Thanks, Mi, for that. Very, very comprehensive. Now, let's move to Amirul, our chart guy. He's got two brand new ideas. Amirul, what have you got for us today?
Hi, Thilan. Thanks for having me. So let me just share my screen first. So we have three new buy ideas for today. But before that, let's go through the Straits Times Index in a moment. So if you look at the STI index over here, as this morning it has also advanced, so it means that the index has advanced for six consecutive sessions, which means that the index itself is extremely bullish. However, if you look at the technical indicators such as the RSI readings, you could see that the RSI reading is now above the 80 level, which means that it is now in an extremely overbought territory. So we should expect a mild consolidation moving forward, or a slower market movement moving forward. However, our primary uptrend remains intact. So one of the support level that you can take a look at is probably the 21-day EMA line over here, which is currently around the 4,000 level. So if, let's say, a healthy correction happens, and as long as the index remains above the 4,000 level over here, the primary uptrend since its April 2025 low remains intact, and possibly a stronger rebound could follow suit. However, despite that, we believe that the strong uptrend could actually resume and might actually make a new high in the upcoming days. So that's a quick look on the Straits Times Index. So let's go through our buy call for today. So we make two buy calls initially for today. Our first buy call would come from DigiCall REIT USD. So if you look at the index over here, it has been in a sideways range from its May 2025 high. So it's been touching the same resistance and support line. However, if you look at the price closely, it has made a higher low structure. and also has formed a cup and handle pattern. So we believe this is a sign for a bullish continuation move as it has formed a new uptrend since its April 2025 low. So the price is now testing its anchored VWAP from its November 2024 high. So if let's say price could actually break above this purple line, which is the 200-day EMA, which is currently at 0.4540, this is a strong sign of a bullish continuation move, as not only price will return back above all of its key moving average line, but it will also return back above its anchored VWAP from this high over here, which means that buyers have regained stronger momentum. Next, we have a technical buy call on value max as well. So as if we compare Digicore REIT and value max shows a better chart as it is clearly in a primary uptrend. Its healthy consolidation previously from its July 2025 high has actually found support from this blue line over here, which is the 21-day EMA line. So recently, price has rebounded again from the line, which means that buying momentum has returned. So we believe price could actually beat its current immediate resistance at 0.620, and if price could do that, it could actually lead to a bullish continuation with our next technical target set at 0.655. So our support level is currently near at the 38.2% Fibonacci retracement level, which is currently at 0.540. So our last buy recommendation for today will come for this company, which is called Olam Group. So if you look at the chart closely, it has actually made a bullish reversal breakout and it's just completed its inverse head and shoulder pattern over here. So you can see the first shoulder, the first head, and also the second shoulder. So price has just recently made a bullish reversal breakout and it is now consolidating right around its neckline pattern over here. So we believe this is a sign for a bullish continuation move as the 21-day EMA over here has just recently crossed above the orange line, which is the 50-day EMA over here. So if price could actually break above this purple line over here, which is currently at 1.01, which is also the 200-day EMA line, this is a sign for a further upside as it will confirm that this structure over here is a new higher low for its current uptrend with the next technical target set at 1.09 and support level you can actually set at the 50-day EMA line over here, which has been acting as a very important line currently at 0.955. So that's all for me today. Back to you, Kilo.
Thanks, Amirul. That was very helpful. Because we're talking about Digicore as well, and we've got a question from Jay online asking about our view on NTT-DC REIT, which will start trading today at 2 p.m. While we don't cover this stock, and we are kind of negative on the ASEAN data center space, we are not particularly negative on the data center space in the US. That's the cutting edge for digitalization, AI, and the assets for NTT are in the US. The offer looks like a good dividend yield as well, a pretty healthy spread above the 10-year US yield. So it looks quite interesting right now. A couple of the risks to watch out for is that there is quite a bit of concentration in terms of tenants and also capex for some of their older data centers and high interest rates as well. But we will, have more details after it debuts on SGX. Just very quickly, I came back from our investment conference in Malaysia a couple of weeks ago. We had CSC, Franken, iFast, ISO team, Netlink, StarHub, Syncta, SGX, and UOB there. And a couple of the key takeaways were a lot of the small and mid caps are actively pursuing growth strategies in terms of overseas expansion, new capacity build outs, and technology adoption. Strategic position in sectors like data centers and semiconductors is driving a lot more growth outlook for them. The larger companies like SGX, UOB are emphasizing more balance sheet efficiency and shareholder returns through stable dividends and buybacks, as well as dividend capital, as well as disciplined capital allocation. So while also keeping some growth trajectories as well. Plus, we saw a lot of investor interest in the overall Singapore market, given where the index is going, and we think there will be more themes particularly in play in terms of the domestic fundamentals, China recovery, Johor Singapore SEZ, that can push the index higher as well. So do have a look at our top 10 picks for Singapore: CICT, Comfort Delgro, CSC, Food Empire, ISO Team, Sea Limited, Sembcorp, SGX, Singtel, and ST Engineering. With that, let's do save the date on the 23rd of July, which is next week. If you haven't signed up yet, there's a few questions on small and mid caps from investors today. Do come and join us at the SGX Center. We will have quite a few small and mid cap recommendations, as well as some very interesting corporate management as well that you will get to hear from. So if you haven't signed up, it's not too late. Do sign up right now. With that, unfortunately, we are out of time. Thank you so much for joining us, and see you next week, and have a profitable trading week.
Recording.